Good afternoon. It is January the 23rd, 2018. Hypothetical simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading also, since the trades have not been executed. The results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representations being made that the account will or is likely to achieve profit or losses similar to those shown. Well, the Emini, we come in darn near every day wanting to buy weakness. We had really good support starting at the 30 area. This morning we had 28 to 30 to start out. The low was 31. We raised it up to 30 to 32. One shot to get in at that level. We had some selling at 39 to 41. Did produce one trade. Our next level was 44.46. Did produce one trade. But clearly the trade is from the long side. And you have much more time to deal with that. And you can disappear for a day if you don't like what happened to you. And look halfway smart the next day or the day thereafter. One of these days that won't work. But when you talk to people about how well they played the market, oh yeah, I'm making a killing, you ask them if they ever gone short, and invariably, for most of them, the answer is no. And until you understand the short side of the market, the bull market is making you look halfway smart. Why do I not like the short side of the market? I mean, it's just, I don't know where the high is. I don't think we put it in yet. I'm not fighting the tape. And as you move out of the middle, and we've had several of those, I mean, it's absolutely amazing. We got in the 28.50 calls a couple of days ago. Got in the 28.25s a couple of days before that. This market is moving and moving fast. Bank of America today just raised their trading target to 3,000 for the S&P 500. Now, when you put trading targets out in front of the market, it's kind of like, hey, what the hell? Let's go get it. We've got a trading target. We know where it is, and 3,000 is the number. JPM put that number out a couple of weeks ago. Bank of America has joined them. I would imagine that Morgan Stanley and the others probably will too. Why wait? That's only 150 points away, if you think about it. So we'll be like we do every day. If we can't take out and hold 45, sell failure. I think there's stops above 50, so 49 to 51, sell 2. On the buy side, maybe coming down and getting stops below 37.50. That might be possible, so we'll try for 35, 37. Let them right in this area for buy 1. And then 30 to 32 for buy 2. Tomorrow's news, FHFA housing price index up 0.5%. That's probably a hit. PMI composite at 54. No one will pay a lot of attention to that. Existing home sales 5.75 million, probably a little lower than that because of interest rates. And then crude inventories. We'll have the APIs tonight. Focus will be the 5-year auction, modified by the direction of the Emini and what happens in the overnight markets. At some point when the market starts to sell, when the market makes new highs, it's usually 30 days or so before we'll come back and we'll get a retest of that high, and there's going to be a piece of news associated with it. So we don't see any signs of topping action, and we don't have a piece of news that says the economy is going to get worse. Everything we're reading is the economy is going to get better. So the move to the upside is accelerating. Kind of like back in November of 2016 when the market started accelerating. Looking at the note, 2-year auction actually did give us a higher low and a higher high. We've got the 5-year tomorrow, so F1 says find a place to buy it. We're in a trading range until the auction is over. Leaning P right here. If I put all of this together, definitely leaning P. So where's the break in the market? It's up here at 122.20, and that's not that far away. So selling 15s to 19s. The 19 would be the one we'd like. And then selling 23s to 27s for sell 2. On the buy side, 7 to 11, buy 1. And 1 to 5, buy 2. Auction week, market will sell, but the bottom won't fall out of it. The market will rally, but it won't explode to the upside without a piece of news. They can't move the paper they need to move if that were to happen. Okay, looking at the 30-year, 12 to 16, number 1. We had a 19 to 23 sell. Still looks good this morning. I think we got up to 21 or 22. And 27 to 31 for sell 2. Last rotate down was stopped at the buck. So the buck to 04, 1, buying 25 to 29 by 1. And 17 to 21 by 2. I expect selling in the overnight in London. The intermediate term usually trades lower. No guarantees, but that's what we expect. And if we see evidence of such, we can move with a little more certainty and a little more aggressiveness. Looking at gold. Trying to trade higher right here. So we've got stops above 50 that we were at back in September. That's up there. Stops above 45. So right now resistance is probably 45 to 50, and we've got pretty good support at 25 to 30, and we're trading up. The F2 screen is going to favor the buy side. We have a new roof, so we had a P behind us. We talked about that all day long, guessing a close in the 37 area, and that's where it was. Day session, and then we got up to 41 here. So we've got sellers at 43. So we'll make 43, 45 on the assumption we'll get a little higher in London, and 48 to 50 for sell 2. On the buy side, 34 to 36 buy 1, and 30 to 32 buy 2. What did I say before I said the number 1? 10. Give me a little bit of context there, please. Oh, the number one, the bond is so volatile that that's the near area of support or resistance, the number ones, and we almost always blow through that, but sometimes we don't. So the number one on the bond is just an area that we have to pay attention to. We really aren't too interested into it, so maybe we should make it 1, 2, and 3, and we're only interested in 2 and 3. That might be a little less confusing. The strength in crude today was attributed to the fact that they're talking about extending or rolling the 2018 quotas to 2019, and the projections are for higher than forecast worldwide economic growth, which will in a large part increase the demand for crude oil. So there's one article out late last week, that talked about inflation was going to come back and fool everybody. Crude oil would be 70 to 80 bucks. I mean, I don't know, but that's a pretty strong profile, and it is a P. And so it's 64.75. We've talked about stops above 65, and how on this move we ought to get above 65. And on that spill 3 years ago, we did spend some time in the 65, 67 area before it dumped from there. So it's an area where there was congestion before. 65 is just close enough that the market knows it. Getting stops above 65, not going to be hard to do. So resistance is 75 to the buck, then 65.25 to 50 for sell 2. On the buy side, 25 to 50, and we have the APIs tonight. That could change things big time. And 63.75, 64. And the euro has been trying to trade higher too, and doing a pretty good job of it. It's in a trading range with an up bias. And we have all that buying behind us. So 22.5, pretty good support. 23.50, pretty good resistance. F1 screen says find a place to buy it. F2 is pretty strong P on where we were this morning. We had 40 to 50 was our sell, so we'll make 40 to 50 our sell. Sell 1, 75, sell 2. On the buy side, like 23. I'll make it 23.20, 23.10 buy 1. Pretty aggressive. Then 22.90, 23 even buy 2. Frankly, I'm a little more comfortable short against 23.50 than I am getting long against 123 even. But that's me, and that's the structure, and we'll just take what the market gives us, which is all we can do. Folks, that's it for this January the 23rd, 2018. I'll see you bright and early in the morning. Me and the boys. Y'all have a great evening.